Hey guys, Steve here with the Anatomy of a Trade for Amazon. If you haven't gotten the word yet, we're going to be doing these morning videos from now on. We're going to try and separate the free content, and then eventually the premium content will be offered in the evenings. But for right now, everything is available to everyone. So, again, these Anatomy of the Trade will be offered once a week, and we'll go over a trade that we made either in my personal account or as part of the strategy sessions, in case you don't follow along with those. So one trade that we did make was Amazon, and I showed you previously, I think Netflix and Caterpillar as good trades, and I also want to make you guys aware that not everything works out perfectly. So Amazon was a trade that we had for the strategy session that set up great, but didn't work out too great in the end due to earnings. So what I want to show you is we basically identified on the weekly chart, because we always look at the weekly chart first, we identified coming into this trend line. We had a low here back in November. We had some lows back here in May, and then we came back in. Actually, it was a little bit more. It was like that, right? And then we had another low that kind of blew past the trend line, came down to this 280 level, and then started working higher. So then on the daily chart, we looked at having this downtrend line in through there. And Amazon, what happened was it was in a downtrend, which was right through here. Okay, on the weekly. So it was in the downtrend again on the daily. And then it started to break through. Okay. And at that point, we said, well, maybe this is a trend reversal. And we started looking for places to get long. So Amazon had started consolidating in this area. Oops. After it broke through the trend line, and see what happened with the 50-day. The 50-day was resistance, right? Here was a resistance. Here was a little resistance. It broke through the 50-day, and now the 50-day was starting to swoop under and actually support price instead of resisting price, meaning that this was now becoming another aspect of a trade, an indicator similar to the trend line that would now have to be broken for the trade to not work. So as Amazon consolidated, right, we were able to actually draw another trend line, an uptrend line. So what happened there, right? We had these lows, then we had some higher lows, then we had consolidation, came into the lows, and then we had a breakout. So right here on this breakout, that was our entry point. Okay, right here. That was our trigger to get long. Make that green. Okay, because now we had some area that in here that we could use as references for a long trade. And again, we didn't know where this was going to go. It could have went back all the way to 400, but we were just taking the trade based off of this consolidation, the 50-day moving average swooping under, now supporting, and trend line moving higher now. So we entered the trade at 346, and we had a couple nice days, it worked higher, but what happened, and unfortunately it was just the way it worked out, was we had earnings come up on the 24th of July. So we entered on the 11th, which was essentially exactly 2 weeks before earnings came out. I do have a 2-week rule that we use, that I won't enter any positions if it's under 2 weeks from the time we would enter to the to earnings. So this was just under that 2-week period. I think it was actually exactly 2 weeks. So we got long. We were doing fine. Stock was moving higher, but we never really got another area that we could move stop up. Oh, I should have said, obviously, when we got this breakout and we entered long at 346, our stop was down here at these closing lows, which was 324. Let's move this up a little. That's going to be important in a minute. Okay. So essentially 324 was our stop. So we were risking 346 minus 324. We were risking $22 on the trade. So it was about 7 or 8%. So we had some nice movement. Stock was moving higher. Really nothing to think that, earnings were going to be bad or anything like that. But we always considered the possibility that we would come back and test either this breakout at 335 or the trend line at 337, 339. So what happened when earnings came out is we gapped way down. Gapped all the way down to, we opened at 317. We went as low as 315. When the day before we closed at 358. So almost a 40-point move overnight from earnings. So we stuck with our plan. Our plan is always that we exit based on closing price. And sure enough, the stock rallied throughout the day and closed right at our stop level. I think I had even tweeted at that point that the stop was 324. And, it had to close above 324. And sure enough, on that day, which was the 25th, closing price was 324.01. So by 1 penny, it was above. So I was like, all right, well, that's good. Maybe now we're going to just consolidate. We'll move back up. We never got that opportunity. The next day closed lower, and that was actually the signal that we exited the trade. So our trade exit was right here. Here was our signal, and we exited right here. The close on the following day, we exited at 321. I'm sorry, the open of the following day, 321.38. So we took the trade from 346 down to 321. So we lost $25, right? 46, 21, $25 on the trade. So, we had sized our position to get out at 324. That's always what I talk about with the slippage being between the 324 and the 321. It's something that you can't really anticipate, but the fact is we followed our plan. We knew where our plan was. We never had the opportunity to move stop higher. We could have potentially, looking back, maybe we could have moved stop to 335, but that was well above the 50-day moving average, so I wasn't really into doing that. So our stop remained at 324, and we got taken out at our initial stop. So I think the trade ended up being a little over 1 R loss. I think it was like 1.2 R, and it's just something that you can't factor in the slippage, and you can't factor in that big of a gap. So, that's one trade that didn't work out for us. But I just want to show you that even though it didn't work out, we still basically got out when we were supposed to get out. We didn't think about it. There was no emotional tie to Amazon. The fact was it didn't work, and we were out. So, now we're taking that capital and deploying it into other trades, and we'll see how those work out. But you could see our exit here was 321, and now the stock as of Friday is sitting at 307. So take your exits when you get them. Don't think about them, because that 1 R loss could easily become 2 and 3 R, and that's the kind of stuff that blows up a portfolio. So again, guys, I hope you liked the video. If you did, please leave a comment, like it on YouTube, and then follow me on StockTwits, Twitter, Google+, subscribe to the YouTube channel, and we do offer the nightly newsletter that goes out that will have the links to these videos that are given out in the morning, and then also the link to the strategy session for the evening. So I hope you guys kind of like the new format and the new video series pages on the blog. I think it definitely ties everything together and kind of takes the blog into the next step where it's more of a video service than really a written service. And like I said, if that's something that you're interested in, definitely leave me some comments and some questions. Sign up for that newsletter, and we'll see you next week for another trade overview. All right, guys, take care.